Hey folks, Dan Frio here, the rate update. Today is July 7th, 2021. Big news out for the Fed. To taper or not to taper? That's the question. So don't go away. We're going to discuss that and more next. Okay, so if you're in the mortgage world, or if you're looking for a mortgage, or you're in the mortgage business, you're going to start really paying attention to the news when it says the Fed is talking about tapering. So let's discuss what tapering is. I did a quick video this morning, kind of going over it. So let's just summarize it in a quick little thing here. So what happens is when the economy is doing really bad, okay, like we had when the pandemic hit, the world basically learned its lesson years ago when the housing market crashed. It basically caused chaos throughout the whole world. Okay, so big lessons were learned there. So what happened was last year the Fed came in and they're like, you know what, one of the things we can't have happen is we can't have the housing market collapse again, because the housing market is a huge part of the economy. Huge. Okay. It just think of all the pieces of the puzzle that go into housing. You got the lumber, you got the roofing, you got the toilets, you got the electricals, you got the carpets, you got this, you have labor costs, you have transportation. It keeps basically the whole country active and moving forward. So that being said, what the Fed has decided this time was they're going to come in and buy up mortgage-backed securities because of the impact that high mortgage rates could have on the economy. So let's go over and let's listen first what CNBC had to say about the tapering in the Fed news today.
Yeah, well, what we know is that the Fed did have a discussion about what that taper would look like when it occurs. The Fed minutes show that the participants do not believe that substantial further progress had yet been made. However, there was a discussion about how to taper and whether MBS, whether those mortgage-backed securities, should be sold off first or perhaps more rapidly than Treasuries, because, as the minutes say, there was concern about valuation pressures in housing markets. However, other participants said that they should be reduced. Treasury and MBS purchases should be tapered at the same time. That would be in line with previous Fed actions and with previous Fed communication. So there's already this discussion around sort of the process of tapering and what should go first, MBS or Treasuries, or whether they should move together.
Okay, so as you can see, they're saying, you know, we might start tapering, but it's basically, when is it going to happen? Okay, I'm thinking it's going to be in the first part of 2022, and the reason being is that the Federal Reserve is going to wait until all of the perfect storm ends. Here's what I mean by the perfect storm. What you have going on in the economy right now, and this is one of the things that is pushing up housing prices that a lot of people don't talk about, are the forbearances. Okay, so here's what a forbearance is. Basically, a forbearance is, and it was created last year in March of 2020, is they came out and said, it was part of the CARES Act, that you can forbear your mortgage payments. That doesn't mean skip or just completely negate out. It basically says you can halt or postpone those payments. Okay, so let's think of it. You go into a forbearance agreement and you don't have to make payments until September of 2021. So it comes March when everybody starts normally putting their houses on the market, March and April. And so their house will sell in May, June. They can move while the kids aren't in school and so forth and get settled in. And then when the fall comes and the kids go back to school, everything's back to normal. Well, if I'm in a forbearance and it's March or April and I'm not making a mortgage payment and funds are a little bit tight, would I put my house on the market and then sell it and then take the proceeds and do what? Am I going to buy again? Well, that would I have to start making my mortgage payment again. Would I go rent? Well, now I'm going to have a housing payment again. Or do I just sit tight until September when I have to get back to making a mortgage payment and worry about it then? That's most likely what's happening with all the data that we have. There is like no properties for sale. It's very, very limited. We're at like a 20-year low in houses on the market. Okay, so that kind of validates the information there. So that's the backdrop of the mortgage-backed securities and mortgage rates and everything. So the Federal Reserve does not control mortgage rates. They control the federal funds rate. The federal funds rate is basically interbank lending. All right, that's what the Fed controls. However, they can manipulate, it might be a bad word, but they can somewhat control what happens with rates this way. You heard on the clipping we saw from CNBC that they're buying MBSs. If you watch this channel, you know what MBSs are. They're mortgage-backed securities. It's basically a bond that trades on Wall Street that is the biggest component of your mortgage rate. Okay, so what the Fed does, again, it's a bond that trades on Wall Street. What the Fed does is they've been jumping in, buying in the tune of $40 billion a month in mortgage-backed securities. So they're buying in truckloads. What that's doing is pushing up the price. Okay, so we all know when the price of a bond goes up, the rate of return or the yield or the mortgage rate goes down. So the Fed's been pumping tons of money into this mortgage-backed securities market to basically stabilize it. They're not buying way too much to drive rates even lower, but they're buying enough to keep them steady. Okay, so that's basically the headlines today that you're going to hear and read. Is it something to be majorly concerned with? No. What will happen, you'll start to see mortgage rates gradually move up. It's just evolution, I'll say. It's going to happen because they're not going to stay at historic low levels forever. The economy, like they were saying, is starting to come back. I think inflation, my personal feelings on inflation, they're going to subside the first quarter of next year. Again, another reason why is, again, remember we have the forbearance agreements in there for millions of people. There's still over 2 million households in forbearance, so they're postponing their mortgage payment. They're not making mortgage payments. Student loans have been deferred as well during this time. You're not making student loan payments. Okay, so if you don't have a house payment and you don't have student loan payments, you really don't have much in bills other than credit cards and so forth. So what's going to happen after September is you're going to have to start making your mortgage payment again. You're going to start having to make your student loan payments again. And also the excess stimulus package for unemployment is going to stop. So now you have a lot of people that aren't making as much money. You have student loans being need paid, and you have house mortgages that are needing paid. People are going to start, that's a chunk of money out of people's pockets each month that they can't go out and continue to spend and go on vacations and out to dinner and all this other stuff. So you're going to see the economy start to roll back to normal levels. Okay, so let's go through some of the headlines that you're going to see today. And again, hopefully I put it in perspective for you so this all makes sense. Federal officials kept a patient tone in terms of tightening monetary policy, minutes show. Okay, so basically they came in and they said, well, you know, we're probably going to start tapering, but we're not going to really solidify a date on what's going on. So that's the recap. Basically, they are now those at least stating that we're a little concerned about this and we're going to need to start tapering. They just started those talks in these minutes. Okay, so what did it have? What effect did it have on the market today? Well, you can see MBS's right here. They ended the day up 5, which was good. We were up another 7 basis points from this earlier in the day, but I'll still take it. So let's look at our trends here that we're seeing. Again, guys, this is what we monitor on a daily basis. This is just one of the reasons why people use my team, because our goal here is not only to get you a loan approved, is to get you the greatest fee structure, the best rate, and lock you in at the best time. And I'm going to show you if your mortgage company locked you in maybe 2 weeks ago, they did you a disservice, and I'm going to show you why. Okay, so this is what the charts look like on the MBS markets. Again, as the number goes up, the price here, that means mortgage rates come down. Okay, so we see through here that we had a nice little uptick here. But what happened here and here, for those that watch me on a daily basis, you know this. These are the time frames right in these areas here that the Federal Reserve came in with their meetings for the last 2 months. Well, going into the meeting, the rumor was inflation's going to run out of control. The Fed's going to have to taper. And what happened? The markets deteriorated, meaning rates went up. We stabilized, we exceeded a little bit where we were through here, but we never got to this peak again. But we got a nice little rally back. What happened again here? Same thing. Inflation fears, then the Federal Reserve meeting, and then the thought of tapering. So we plummeted again. And look, we rallied back up. The nice thing is a lot of these resistance levels right here, these are what we call Fibonacci levels, they're starting to really play their tune. Look right here. We hit the Fibonacci level here and stopped. We hit the Fibonacci level here and stopped. We kind of did the same back in several areas through here. Okay, so the trend right now is nice. Here's what I meant by if your mortgage company locked you in previously, they did you a disservice. If you go back and watch my videos from the beginning and middle of June, say June 7th through the 10th, you're going to see I said we're going to have this plummet, and then we're going to recover. And my thought process would recover to about this range here. So I did not lock any of our clients down here. Remember, as this goes down, rates go up. As this goes up, rates come down. So when we start hitting these areas here where I'm assuming I'm going to lock, I kept seeing green candlesticks, which mean we have the momentum of upwards. Okay, so I held off and held off and held off. So we only locked you during this time frame if we were closing you very soon. If not, we were holding, because the longer we were holding off, the better rates we're getting. Okay, so that's why we did what we do. And again, if you lock down in here, please, I'd love to talk to you to see if we can help you in any way. So let's see what happened today during before, during, and after the meeting. Well, it's kind of, this shows you the picture. We rallied into the news, or we knew the news was coming, and then around 1 o'clock, this is noon our time, we're in Central Standard Time, the market plummeted and continued to plummet. Okay, but I did a recording right in here, and I said, let's just wait and see what the market bears, because in previous sessions we had a rally back, and we rallied back. Okay, that was perfect timing, and we couldn't have called this any better. Information that came out today, as we know, the federal meetings minutes came out, and we just addressed that. But the JOLT index, go back to my video from yesterday, and you can see this number changed. Okay, this number completely changed. The previous number we saw in the JOLT index was 9.1. This showed yesterday, I'm almost positive, 8. I predicted yesterday that we would be at about a 9.2, and we came in at 9.2. Okay, so what is the JOLT index? Basically, the JOLT index is the number of job openings in the country. Okay, so we focus a lot of times on how many people are out of work, on unemployment claims and all this other stuff, but how many openings are there? There's over 9 million openings, and that's unprecedented other than last month's where we were at 9.3 million. So there are a ton of job openings. Okay, so that's one part of the economy where the Fed is kind of betwixt and between. They're like, there's a lot of unemployment, but there's also a lot of job openings. So again, when the part of the CARES Act stops or pulls back the extra money that they're sending out for the unemployed, I think you're going to start seeing these JOLT numbers dramatically drop and going back to normal levels. And that's why my prediction is the first quarter of 2022 is going to be very, very, very relative to all of this. And so that's it for today, guys. I'll leave it at that. I'll come back tomorrow with rates, because they're all over the map right now, and my rates are actually from yesterday, so I want to see how this played a role into things. But I'm excited on a few different things. I'm going to show you our new website, and things are getting added. I talked with the developers today in detail. We're going to add the Calendarly events, or calendar scheduling on here, so you can schedule an appointment with me and all of my mortgage advisors. But this is our new site. Up through here, this is showing right now our 800 number. So if you'd like to talk to somebody personally, give us a call at 844-775-LOAN. It's 844-775-LOAN. The website is still therateupdate.com. You can go through here, and there's all kind of features. You can go to the rate update and click that there, and it'll bring you to a page with all of our YouTube videos. There's over 900. You can also go back and start the process of buying a home or refinancing. You can scroll down. There's calculator tools. There's all kind of things you can do on here to learn the process and find out what your payments would be and so forth. But if you'd like to apply, all you need to do is click here, scroll down a little bit, click here, get started, pick from one of our 12 different loan officers or mortgage advisors. If you'd like to work with me personally, you just click here and do that as well. I am adding calendar accounts to every client, every person on here, so you can schedule an appointment with somebody in particular if you want to, work with them directly. And then what I also ask people to do on a daily basis is please check out my website or my YouTube channel. It's the Rate Update with Dan Frio. There's over 900 videos. We're hitting about 100 subscribers a day. So thanks to you guys for all of that. And I hope to hear from you. So if you're in the process of building a house, buying a house, refinancing, please give us a shot. It's going to take maybe 10 minutes of your time. We can give you quotes and do all that other stuff, but we need the pieces of the puzzle to be able to do this. A lot of times people are saying, hey, what's your 30-year rate today? And if you watch my channel a lot, the first thing we're going to say is, we don't know. We don't know, because the rate is a variable of probably 100 different factors. So we need to know what your factors are so we can give you a specific mortgage rate. But what we're working with people right now is that people that are building homes that are not, the house isn't going to be built for another 6, 7, 8 months. Most builders will only lock your rate in for 60 days. So if you're looking for an extended lock, we have an extended lock up to 1 year in most of the country. Not all states, but most of the states we have that. If you're going to buy a house, we can link you, your realtors, your attorneys, everything right here on our mobile app. We can get you pre-approved, pull your credit, do this, give you rate quotes and everything from the mobile app. You can chat with us, you can chat with your realtor. It's one big team building process with that mobile app, and that's how we can help you there. If you're looking to refinance, your rate's over 4.5, and you're like, I just don't know if this is going to, benefit us. Send me a copy of your mortgage statement. Let me do a mortgage analysis, and I'll get back with you and say, here's what I can do, and here's what my true opinions are. There's many times I go, keep with what you got. You got a good mortgage, pay an extra $100 a month when and if you can. But many times we can say, are you comfortable with the payment? Yeah, it's okay. Well, how about if we kept your payment and cut off 5 or 10 years on your mortgage? That happens more than you think. So we'd love to help you there. So to get started, just visit the website, check us out on YouTube. Don't forget to give us a thumbs up, subscribe down below, and hit the bell every time we post a video. You get an alert. God bless, guys. Thank you so much. I will be posting rates tomorrow, I promise you. I just didn't want to take up too much of your time this evening with so much details, because I wanted to explain to you guys what the Fed's doing and why they're doing it and how it will affect you. So God bless. Take care. See you tomorrow. Bye-bye.